You might have seen that when people go to Western countries like Canada, US, UK, for example, or Australia, you might have seen them buying luxury items like, for example, iPhones or, for example, cars, or you might have seen people getting houses on mortgage, etc. So now the big question arises that how you can afford such items in countries like this. And obviously we know that the cost of living is very high in these countries, for example rent and etc., like grocery or travel, for example. Then how come anyone who goes to these countries can actually afford such luxury items? So in this video today I'm going to explain that how people are able to buy very expensive items here, even though if you look at their earning that might not be very good, but still they are able to afford such items. And obviously how they are able to basically buy those things. So if you're interested to know and if you want to understand the whole process, then watch this video. I'm Innocent here and welcome to my Facebook page and YouTube channel. As I mentioned in this video today, I will be talking about the purchasing power of people living in Western countries such as UK, Canada, Australia, etc. Now, you might have seen many people, they flex their iPhones, or they basically show big expensive car, for example, BMWs or Mercedes, for example. And many people back in home countries like Pakistan, India, or Bangladesh wonder that how they were able to achieve in such a small duration of time, how they were able to get all those luxury items. And the answer lies in basically they take loan from the bank and they basically get things using what we call installments. There is a system of installment in Pakistan as well, or maybe India as well, where you can, for example, buy an electronics item, but you have to pay installments instead of paying the full amount instead. So for example, if a appliance costs, let's say 100,000 Pakistani rupees, so they may get it on installment, but obviously the companies in Pakistan, they charge interest on it, and interest is quite hefty. Sometimes it might be 25 to 30% depending upon the appliance and also the terms and conditions. But in the UK, for example, you may get the same appliance for the installment for, let's say, 6 months or let's say 8 months, without paying a single penny of interest, because these countries over here, they want people to actually use the products. And obviously if you see the Western countries and mostly the people here, it is basically a consumer market. So for example, if a BMW launches a car, obviously it is quite expensive. It might be 25,000 to 30,000 pounds, and nobody can actually afford to actually buy that car. But what they do, they offer installments, and there are different things that need to be considered. For example, if you want to, let's say, pay within 1 year, for example, a company can offer you without interest you can actually get any car, for example, or any appliance without paying a single penny of interest. But what happens is you are supposed to actually pay the cost of that car through installments, or 10 equal installments, or 12 installments, for example. And this is the reason why many people, when you see, they are able to buy iPhone. Even the cost of iPhone is very high here. For example, if you look here, the monthly salaries are around 1,800 pounds to 1,900 pounds per month on average. People have to pay rent as well, bills, utility bills, council tax, etc. But obviously you might have seen people, they simply come here and they are able to flex their luxury items. And the reason why they're able to do it, because they are able to get things on installments. Now the next question arises that how you can then get these things on installments. Like, is there any check and balance? Obviously yes, there's a very big check and balance, and that mechanism is known as credit score. And this video is about like improving your credit score. For example, if you're coming to the UK and also you want to buy few things, or you want to buy a house on mortgage, or if you want banks to finance your car, and you want to have things that you want to purchase, then the most important thing that you need to do is to improve your credit score. Now, what is credit score? Credit score basically is a mechanism in which the banks would know whether you have got enough purchasing power or not, or you are a good customer or not in terms of managing your payments. So for example, if you pay your rent and it is a direct debit, which means that every single month at a certain date, your rent automatically deducts from your bank account. Similarly, if you have done the similar kind of things like direct debit, using for your council tax, for example, and at a certain date it automatically deducts your council tax. And similarly, if you're paying utility bills like your mobile phone bills, for example, or broadband bills, for example, or electricity or gas bills, and you also have set up the direct debit in which basically the company deducts and from your account automatically the amount of bill on a certain date, then obviously, and if your account doesn't go to negative, like it doesn't go to a negative balance, then it means that you are managing well, and your credit score will build over time. So for example, when I came to the UK for the very first time, my credit score was very little, very small. Even if I wanted to apply for a mortgage, or if I wanted to apply for any sort of finance, for example, I could not have done it because obviously there was no history on my record. I came to the UK in 2022, and obviously it takes certain amount of time to actually build that credit score or credit history. And over the period of time, if you are managing your payments, for example, then what happens is that your credit score starts building. And obviously, if you have a very good score, a very good credit score, I will be showing on the video on the screen as well that what it means, that and what is the score that you need to have a good credit score specifically in the UK. So if you lie on a good credit score, so there are two things that can happen. First of all, you can apply for a more loan. For example, if you want to apply for mortgage cost, let's say any house in London, for example, can be as high as £400,000. I'm talking about a one bedroom flat, so the cost of flats are quite high. So if you want to take mortgage from the bank, for example, then obviously they will look at your credit history and credit score, and obviously you should have a decent credit score in order to get lower interest rate, and at the same time the bank will be only willing to give you amount on mortgage if you have a good credit score. So this is first thing. Secondly, if you, for example, want to have your car finance, for example, if you want to have your iPhone, for example, so depending upon the cost, the bank will actually see that what is your credit score, and if your credit score is poor, they might decline your application, or they might charge you a higher interest rate. And if your credit score becomes higher, as I said earlier, that if you do your timely payments and your account doesn't goes into negative, you will have a better credit score, and the bank or a company which is offering you installments might take lesser interest rate, or they might say that, okay, if you are able to pay within 6 months or 8 months, we will charge 0% interest, and whatever the price of the thing is currently at today, for example, over the period of time, or even if you're doing in installments, you have to pay the same amount and you do not need to pay anything extra. So this is how it works basically. And now there are a few things that you need to remember, that if you want to improve your credit score, if you are changing your house or flat a lot of time, more frequently, for example, then your credit score will actually become weaker, because it means that you are not a stable person and you are shifting around and moving around to different places. So when you are coming to the UK, you need to remember this thing, that if you are changing your address quite frequently, and they will definitely know it, because obviously your council is attached to it, your GP records are attached to it, so they will always know that even though if you have not mentioned an address to any bank account, for example, or any other document, even though they would be able to find that out, because you might have registered a GP with that address, or any postal thing that has package that come on that address, anything, for example. So you will never get away with this, and your address will become the part of your history, that way you lived. So if you're changing your addresses quite frequently, then it means that your credit score will also go down. And also, if you have a habit of opening so many accounts, for example, in Pakistan, when I was changing job from one school to another school, the new school will always ask for a newer bank account, for example. So in the UK, you don't need to open too many accounts. You basically have, if you have one good decent bank account, then that is enough, because all the payments can be made through that bank account. So if you're opening too many bank accounts, for example, then it also lowers your credit score. And the third thing, obviously, as I said, if you are not paying your payments regularly, then that will also basically going to decrease your credit score. Now, one more thing that you can do, for example, many people they pay council tax by, whenever the bill arrives, they will just pay, they will go to the bank account and online and they will pay through it. My suggestion would be to actually set up a direct debit for anything that is a regular payment. For example, if you're paying, a rental amount, for example, I would suggest that you should be establishing a direct debit, for example, that automatically the company or organization should be able to deduct the amount, on a monthly cycle on that particular date. Similarly, if you are paying your electricity bills and everything, there are two options. Either you pay as go, like, which means that whenever the bill arrives, you just go to the bank account and it will, you have to pay physically. But if you set up a direct debit, it means that the company is going to deduct that amount directly from your account on a specific date. So if you want to improve your credit score, you should be setting up loads of direct debits, for example, whatever you've done. And with this, from this, basically, your credit score is going to improve. And once your credit score is improved, after some time, after some period of time, you can also apply for the mortgage. I'm going to make a separate video on the topic that how people can apply for a mortgage for a loan, basically, which can help you to get your first home in the UK, for example. I will make a separate video on that. But today's video basically was on the topic that how people are able to afford luxury items, iPhone, for example, or cars, for example, when they arrive to the UK. And as I said earlier, if you are able to improve your credit score within like few months, then obviously you can finance your things. And some of the items might be interest free, and some of the items in which the people can actually pay interest and they can pay higher amount to basically get that thing, basically. So this is how it works. So credit score is very, very important, and it also sees if you have got any criminal record, for example, or any other thing. It also oversees that as well. So if you want to improve your credit score, as I said, do not change your place again and again. Just stay in one place in one area that you're living. Do not change your accommodation again and again. Pay your timely, whatever the amounts that you're paying, it should be done timely. And I would suggest that do it on direct debit basis, for example. And over the period of time, your credit score would improve. And if you get anything on, let's say, on installments, let's say you buy an iPhone and you're able to manage to pay within, let's say, 6 to 8 months, whatever the terms and conditions were, you were able to pay everything on time, then your credit score will also increase. And also, if you want to apply for a credit card, for example, they also look at your credit score, and if your credit score is low, they will not allow you to have a credit card as well. And you have seen many people, they are applying for credit cards in these countries. The reason why they apply for is because if you are doing timely payments, you get basically many bonus points, and then you can use those points in your travel, for example, or your flights, for example. So many people, they tend to have credit cards because if you are doing timely payments, you don't have to pay interest, and secondly, you get a lot of points as well, which you can use on different things that you're purchasing. So it's totally up to you what you want to do. But as I said earlier, that credit score is very, very important. So if you have any questions, please do write in the comment section. Thank you so much for watching my videos. I'm Hassan, signing off.